Hi, I'm Eddie Joels. Welcome back to Video Credit Score, and today we're going to talk about auto loans and credit scores. And the question is, how do credit scores really work when it comes to auto loans? And it's pretty interesting because first off, most auto dealers only use one credit score. And they're usually just using one score from one bureau. So why are they using just one? Well, it's expensive to use multiple credit scores, and for something like an auto loan, they must feel like for the risk that one score works pretty well in their modeling. Whereas mortgages, the amount is so large that they really want to look at all three scores from all three bureaus and get a really good composite overview. So they're using just one score. Well, but here's the thing, you don't know which one score they're using. And even if you do know which one they're using, you probably want to get all three scores from all three bureaus. And that's because you can use the other two scores as leverage. You can say, hey, I'm going to go to this other dealer down the street. I know he uses the Bureau X score when you use Bureau Y score, and you can use that as negotiating leverage. So that's one point. Next is most of these auto lenders are using the FICO score system, but they may not be using the FICO Beacon score. They may be using what's called the FICO Auto Industry Score. And what is this? The FICO Auto Industry Score is a scoring model that's tweaked for the auto industry. So as you might suspect, it takes into account your credit history around auto behavior and gives that a little bit more weight. So because of that, it's a little bit different than the FICO scores you're going to see when you pull them on myfico.com, for instance. So because of this, you may be in a situation where your score is different, your FICO score is different from the FICO Auto Industry Score. And this can create some tricky scenarios, right? Because someone who's unscrupulous might sort of know that, well, they think your FICO score, you bring it in and it's actually lower than the auto industry score, and they could actually just try to give you a rate based on the score that you provide. So you got to be careful. And here's the winning strategy. What you want to do is you want to go into the dealer and make them reveal what their scores are first to you. So you want to pull your scores ahead of time, but make sure they tell you what their scores are. Now, if their score is higher, then just be quiet and use their score, right? Now, if your scores are higher, you want to pull your scores out, the ones that you pulled, and say, hey, I know you're saying that the FICO score you have is this, but here's the score that I have. And again, you can use this as negotiating leverage to either make them try to see if they'll use the scores that you have, or whether or not you can actually go down the street to another dealer and try to actually negotiate that way. So again, classic situation where more information is more power. If you want to learn more about this and other subjects, come visit me, videocreditscore.com. Follow me on Twitter and friend me up on Facebook. See you soon. Remember, everyone's situation is different. Be sure to contact a financial advisor or a credit counseling professional before making important financial decisions. This video broadcast is for educational purposes and not a substitute for receiving personalized professional advice.